All right, guys, so pretty much in today's trade recap, as you saw, we took one W and then I took another L, and the account is at basically minus 324. So if we would have just held the first trade on NQ, we would be pretty much up around like 3% on the account, and getting closer to passing the evals. But I'm gonna go through what I was thinking and my thought process behind the trade idea. I'm gonna go over the charts, and then I'm gonna go over the trade I took here that made me lose. And of course, I'm gonna show you guys the executions. We took one trade and then I exited. I was like, all right, this is an impulsive trade. As soon as we broke structure, and then we took another buy as soon as it retraced back into the IFEG, and then eventually we exited for an L at this low right here of this order block. We took no trades on ES, but we did take one trade on NQ, and this was the trade of the day. So one thing I'm incorporating a lot more is standard deviations for projections and like targets, for when the change in the state of delivery is happening and all that good stuff with the market structure. But as you can see here, this was the buy right here. We took a buy right here at this change in the state of delivery, and then we exited for a sell right here. I didn't see the speed, I didn't see the market movement, and eventually what do we have also here? A bearish breaker after sweeping external sell side liquidity. But we had a 15-minute buy and balance get retraced up into, and of course the market structure was bullish this whole entire day. I know you probably can't see, but we took a buy and then we exited, and I was aiming for, being truly honest, I moved the stop eventually to right here, but the original stop loss was right there, and I was aiming for this high right here, 4.1 to 1.3, and that would have been the trade idea if we would have let it run 1 to 2. But of course this would have been the final target, but that was the final target, 1 to 3, around 3 contracts, so 1,300 for the risk. That is not usually my type of risk. The risk reward is pretty high up there. Take profit 113, and the stop loss is around 87 ticks. We would have lost close to $1,000 right here, and then we would have gained around 1,600, around 1,700. And that's pretty unfortunate because the trade idea did play out, and eventually we went and took a shitty one on this one. Impulsive, revenge trading, trying to make back the win. That just isn't usually what you want to do whenever you're trading. And then eventually we took an L on the top step account, so let me show you guys that right now too. We took an 863 L, and this is where I went wrong at first. This is my thought process. So we had a change in state of delivery breaker, external sweep. We had a market structure shift, clear 22 model, boom, it failed. Why? Because the bias is bullish. This is all low resistance liquidity, and the market was aiming to take that out before moving higher, and eventually it did that. So it swept some of these lows, and then it retraced into the 15-minute buy center balance. SMT at that buy center balance because ES never really retraced up into it, as you can see, while NQ dug into it. So that is another thing, SMT. And then eventually you can see here the market just eventually ran and took me out for around like that for stop loss. Of course, stop loss, first L, and then I flipped my bias. I was like, okay, I took an L here. I'm flipping my bias because we're bullish. You know what I'm saying? Like, we had a 15-minute buy center balance. What am I thinking? What am I doing? That breaker isn't, this 1 minute breaker isn't powerful. It isn't as powerful as the 15-minute, BISI, or the 15-minute BISI with the SMT at the lows. Clearly, you know what I'm saying? Like, I realized that too late. Took the L. All right, so this is the account for Alpha Futures. As you can see here, we're down minus 255 on the daily loss limit. The maximum loss limit is 48,493. So we can't go below that. On top step, we have lost around 1,200, and eventually all we have left is around 600 for drawdown, which is pretty unfortunate, honestly. This account has been going down. I feel like this account, I don't treat it as I would with the other one, which is pretty unfortunate because the other one, we're treating it really, really nicely. Where the best trade is 1,100. This trade is 800 for the worst trade. Average win, and then average loss. Win rate, number of trades, contracts. You can see here 73. So minus 324, 322,000, minus 900. This has been all over the place. First week back actually trading, if I'm being truly honest. Because the other account, I really wouldn't say I was back. Because I'm still back testing. I was still reviewing my trades. I was still analyzing my back tests. I am reviewing them. I have not been reviewing them as much. I got to go to work 1 p.m. New York time. So 12 o'clock Central time. It's just chaotic, bro. But let me go over the bias as to why I even took this trade. I do plan on journaling it, and tonight I really plan on really going over everything and staying up late, and go to work again. So on the daily, we're bullish. We're clearly candle closure above right here. What are we aiming for? Previous day high now. This is your clear draw right here, market maker buy model. And then on the 4 hour, we had a 4 hour BPR, and again, 6 a.m., 10 a.m. And then this was on the 4 hour. We also had a break in market structure, clear bullish structure We can retrace 50%. That's kind of what happened here. Retrace equilibrium, pushed up higher. And then on the 1H, we had, this is the 15-minute, but on the and then on the 1H, we had external high, external low of the range. And then, again, we were just trading inside of that 4-hour BPR. And then on the 15-minute time frame, we had a 15-minute low, which we never swept. And then we had 15-minute highs right around here, which again, we got close to sweeping, came down, and then we just ran right through them. Created a 15-minute buy center balance. This was where the trade idea was, since we had one stab into the external objective. 5-minute, nothing really here. You can see the market, pre-market lows, and then eventually the market started to move up higher. Clear break of market structure, showing bullish intentions to reach for the external objectives up here, and eventually you can see we pushed right through that. The 1 minute here, this is where I used my standard deviations right here. This right here was your first area of objective, and then this was the second one. You can see here the second one was eventually aligning with this one right here, and that's kind of another reason why I even took this trade. Didn't manage to trade really well at all today. If we simply held the trade, we would have not taken the $300 loss we took today. We were up, from taking that W, which was like only $100, and then we lost 400. So we're down 300. We're really down 400. And then, if we simply stayed calm, stayed patient, we would have been up 100. We would have been at like 50K with would have been at like 1%, close to like 1.3. We would have been at 1% closer to getting 2%. But if we simply held the trade, let it run, we would have been at 3%, getting closer to the account. And the reason why I didn't hold this trade was because of the other correlations between the assets. I saw this. I was like, all right, hold on, they're not moving. They look weak. Dow Jones looks weak, all this, that. But in Q, created SMT, I'm just not like, I need to be like having more market experience, trading more. And again, this is kind of, my first week actually trading, actually being back, actually locked in. One of those weeks where you just don't feel comfortable holding a trade, and it's with market experience you eventually get comfortable holding those trades with that type of risk. And another thing too is like I didn't accept the risk when I took the trade. I didn't accept the risk because I didn't want to lose around like 2% or more, or like go above the daily loss limit. But the trade idea played out perfectly. It played out perfectly. It worked out. I need a journal, I need a review, analyze what went wrong, where did I go wrong, and shift my mindset, again, because these are just combines. These are evaluations. I'm here to go heavy with risk and continue going, and just, that's another thing too. I've been complacent recently. I've been getting too comfortable. I have not been reviewing my trades. I have not been back testing. I have not been, going over today's, trading day and like reviewing, analyzing, going over it more deeply. That's another thing. I'm getting too comfortable. What I'm saying? Like I back tested a couple of times last weekend. I'm good. I'm perfect. No, we need to continue doing that. Continue putting in the work. Not get comfortable and complacent, because this is what happens, because I still have so much more to learn, like I'm not, you never reach a certain limit where you know it all, I still have so much more to learn. And again, with these combines, if I really want to start, milking them, I'm going to have to be able to accept that type of risk. And I have to like really get it through my mind that I'm going to have to accept that type of risk, go into the trading day accepting that type of risk, and trading high probability conditions, understanding the high probability conditions, not taking that not taking that loss on the first trade on the top step account because we're not following our strategy. We weren't really following our strategy. There's no point of trying to take trades like that if you're not following your strategy, sticking to your rules, being patient. It's just that, it's really that I need to work on. But again, it's just really a mindset shift that I got to have, especially when it comes to these evaluations and like not having any sort of attachment to them or the P&L or anything like that, to the account status, anything. I'm here to milk them. I'm here to get the ROI, get the payout, and build personal capital. I really need to continue putting in the work and really focusing on the trades, not really the accounts or the P&L or anything like that, because the trades, again, are what matter more. And the trader too, and the mindset. So that's pretty much really it for today. Down 400, minus 400, plus the 800. So I'm down around like 1200 today. So I really need to review this week. And if we blow the top step account again for next week, I'm going to probably just buy another one and continue going. Because again, that's all, you really can do. Just back test this weekend, review all my trades for the week, live trading, of course, refine my model, refine what I can do better when I'm trading live time, and how to manage these positions more accordingly. So that's pretty much really it. Hopefully next week is a better week. Hopefully next week we actually pass an account, if I'm being truly honest, because we have CPI, we have a lot more better, conditions. This week we really didn't have much news. We didn't have much volatility in the market. Of course, it was still moving, but whenever you have those high news drivers like CPI, NFP, or FOMC, market really moves with speed and heavy direction, and the price action gets really clean. So again, back testing this weekend, reviewing my trades, analyzing, seeing what I can do better, and coming back stronger. Simple as that. You can always improve, you can always get better no matter what, and continue putting in the work. The more hours you put in, the more of the results that you want you will get. As simple as that. It's always going to be like that. So yeah, that's pretty much really it. So yeah, peace.